Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, and welcome to the first edition of our weekly podcast, The Week That Was, where we summarize financial moves over the last week, its investment implications for you, and what we are watching for in the week ahead. I am Vinay Joseph, and let's kickstart with a quick summary of last week's market moves. Rising inflation amid hawkish central banks and a rally in crude oil prices drove a sharp sell-off in Indian assets. Indian equity markets had its worst weekly loss in nearly 3 months, with the Nifty index down about 3% for the week, underperforming its emerging market and developed market peers, amid aggressive selling by foreign investors, who sold over $1.5 billion worth of equities this week. The cuts were deeper for the mid-cap and small-cap indices, with both indices down over 4%. Among sectors, IT and telecom were the worst performing sectors, while value sectors did relatively better. On bonds, yields continued its upward trajectory, with the benchmark 10-year IGB yield up 5 basis points for the week to close at 6.63%, close to a 2-year high. Corporate bond yields, especially AAA, surged, while short-term money market rates rose to its highest level since April 2020. The INR depreciated 0.4% and underperformed peers, while commodities continued its uptrend, with oil trading close to multi-year highs. So is this a sign of a deeper correction? In our view, investors should brace for higher volatility this year. 2022 is likely to see markets transitioning to mid-cycle from early cycle, with equity returns more modest. Normalization of ultra-loose monetary policy drives the transition to mid-cycle, and market volatility is likely to persist as markets try to price in a higher interest rate trajectory. Nevertheless, we see policy normalization as a sign of confidence of central banks in the growth recovery, and policy rates are not restrictive enough for equity markets yet. In mid-cycle, equity returns are driven mainly by earnings growth, which in our view remains strong and robust. The ongoing earnings season will be closely watched. Consensus expectations are for another good quarter of earnings, with Nifty expected to deliver strong double-digit profit growth again this quarter. Overall, we will use market volatility to add to our preferred assets: large cap equities, value style equities, and corporate bonds. Finally, investors would keep a close eye on next week's Fed policy for indications of when and at what pace the Fed plans to reduce its balance sheet, and whether the Fed indicates tightening policy more than what is already priced in, that is 3 rate hikes for 2022. So have a great week ahead, and we'll be back next Monday. Thank you.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.